Charles Goddard here. This is another in our series of short videos with some chart and trading information for you. Today we're going to take a look at another pattern. It's a head and shoulders pattern. This one is quite reliable and the outcomes are fairly predictable. So let's take a look at it. Before we do that, let's have a little intro of me. That's me there, and you can see my designations, and they represent a lot of sweat hours. I also spent thousands of dollars in the company of veteran traders, the sort of guy that applied his trade in the famous pits of Chicago. And it was those guys that taught me that theoretical was one thing, but if you wanted to be a consistent trader, you had to bring some practical aspects as well. So that combination of practical and theoretical is what I bring to the table for you. So let's take a look at our patterns. Right. So you see a chart of the S&P 500 displaying head and shoulders pattern. Just a quick story. I was interviewed once by a chap from a television show, and he said, I don't understand what head and shoulders has to do with investing or trading. And he's like a lot of people who hear the name of a pattern, whether it's a triangle or whether it's a flag pattern or whatever, and think there's something about the name of it. And it's not. It's to do with the struggle, the fight, whatever you want to call it, between the bulls and the bears, supply, demand, buyers, sellers, and so on. And what we've got with the head and shoulders is quite simply we look at the definition of an uptrend, and it's higher highs and higher lows, and we look at the definition of a downtrend, and it's lower highs and lower lows. And the transition between an uptrend and a downtrend, or a downtrend to an uptrend, can resemble a head and shoulders or a reverse head and shoulders. And when these patterns form, they become quite predictable every time. No, certainly not. There is a warning when they have failed, but they come out or are predictable enough times that you should pay attention when you see one. So you can see it here. You can see the left shoulder, you see the head, you see the right. And if you look for the underlying reason for this head and shoulders, the change of trend, then that's how you confirm that this is a head and shoulders. Don't just go looking for head and shoulders, which is the first thing everybody does, but rather see it within the context of the chart itself. So you've got a neckline, which is a key component of the head and shoulders, and we can make use of that if we measure from the head to the neckline and we subtract that from that amount from the neckline, we get a good downsize target, which as I've said, is quite reliable. Now, where is it that this pattern fails us? Well, if the price moves above the right shoulder, this pattern has broken down. And it's not because, it's moved above the right shoulder. It's because the new high is going to be above the previous high, which, as we know from our definitions of trends, means that downtrend that we thought had started has not started yet, or it's giving us a warning that it's maybe delayed or whatever, but we need to get out of our trade at that point. And of course, this is the short trade, which many of you don't like. So what we're going to do is we're going to take a look at the reverse head and shoulders next. Okay, so here's the reverse head and shoulders, and it is essentially a downtrend turning into an uptrend, and the transition looking a bit like an upside down reverse head and shoulders. And you've got your left shoulder, you've got the head, you've got your right shoulder, and you've got a neckline. Now, so where would we place our trades? Well, we would put a buy trade just above the neckline. There's a green candle there with its head stuck up to the right hand side of our pattern. I would put it just above that. Let me see if I can grab a little marker for you here. Somewhere right in here, I would put my buy, and where would we put our stop? As I've said before, we would put it right under the right hand shoulder. So if the price drops below that right shoulder, it is because the uptrend is not ready to go, or it's failing and we're continuing on with a downtrend. So when the price drops below that right shoulder, you've been warned. The uptrend is not as 100% as we may have first thought. So there you have the reverse head and shoulders. Keep an eye out for them. Just remember what the underlying story is that creates the head and shoulders and the reverse head and shoulders. All right, our startling conclusion. Not much to say here. The head and shoulders pattern is one of many patterns that I go through in my book, and we don't really touch on them in this particular workshop that's coming up. But registration for that workshop gets you my book. It's about 120 pages, and it covers a lot of the more reliable patterns and where to place your trades and stops and so on. So the contact for the workshop is shown here. You may have to copy that and paste it. I don't know. I should check really to see if it's a live link. I don't think it is. But anyway, you can cope with it. I'm sure you're all very smart with this stuff. And hopefully I'll see you in the workshop, and we'll see if we can't get a few stock trading tips and information your way. So thanks for listening, and take care, and bye now.